All right, let's talk about credit seekers or how you may be screwing up getting your mortgage pre approved by looking like a credit seeker. I just want to warn you about this because I've seen it happen a bunch lately, and it's happening because rates from mortgage brokers are not necessarily as good as rates from banks. So people are scattering themselves out to banks, and they could really be doing a lot of damage to their situation when they're looking to purchase a property, particularly if you're a marginal borrower with a bit of a dicey credit score. So I'm going to break that down. I'm going to tell you what you should be looking for and how it's likely happening right now as a result of just this crazy kind of market that we're finding ourselves in regards to mortgage rates and exactly what they're doing. So if you'd like to stay up to date on the real estate market, particularly with a focus of my market here in Greater Vancouver, Surrey, and the Fraser Valley, go ahead and subscribe to the channel. I'd really appreciate it. Click the like button to get this information out to other people so they don't screw up their own credit. And of course, if you need help and you're looking to buy or sell a property, again, within those same areas here in the lower mainland of BC, you can book a call with me right now using the link in the description below. So let's get into it. Particularly with a lot of buyers right now, they're looking for very good deals because we all thought mortgage rates are coming down. It's not looking like mortgage rates are coming down, and in fixed rate products, which most people want right now, they want some stability. Fixed rates are actually inching upwards. Not a lot, but a little bit. So what's going on? I'm seeing clients normally the first step is I get them in touch with a mortgage broker when they want to buy a property. You can go to your bank, and that's okay. And if you go to a credit union, I'm probably going to steer you away from most credit unions these days. If you go to certain banks just suck. I have very strong opinions about which banks you should or shouldn't be going to. But people are going out looking for their best rates. And I always say phone an independent mortgage broker. I personally phone an independent mortgage broker. I do all of my mortgages with an independent mortgage broker. And they shop me around and they find me the best product for me. The best product is not always rate, but sometimes the best product is actually a bank of which I could just go to directly. And what we're seeing right now is mortgage brokers themselves are not able to offer as good a rate, for instance, with Scotiabank, as if you go directly to Scotiabank. So if you go to Scotiabank, they're probably going to give you a better rate. I don't mean go to the branch and talk to somebody behind the counter because they don't know what they're doing. You got to talk to a mortgage specialist at that bank. So RBC, BMO, TD, Scotiabank, they all have mortgage specialists. Most of them are mobile, so they don't actually have a branch that they sit at. They're kind of like a mortgage broker, but they only do business for that specific bank. Well, these days, if you, for instance, went to an independent broker, they may be able to offer you somewhere around 4.4 to 4.5 at Scotiabank. But if you go to a specialist, a mortgage specialist at Scotiabank, they're offering 4.2. I've seen as low as like 3.89. So it's very, very tempting to go to the individual banks. And I don't blame you for that because you're essentially getting the exact same mortgage. Now, you may go to a broker and they're going to promise you some ultra low rate that they're going to bait and switch you on, or you may go to a different company on one of these internet companies that's going to give you a bait and switch. But that's not what's happening right now. What's happening is legitimately the banks are offering better rates if you're going direct. Really crappy for the mortgage broker, but that's not really my concern. My concern is getting my clients the best rate and the best product, not always the same thing. So you go to a mortgage broker, they give you a rate of 4.5%. You go into your own bank, happens to be Scotiabank, they're like, how about 4.2? So now you're like, okay, well, if they're going to offer me 4.2, maybe I'll go into a different bank and I'll go check and see what they can offer me, and I'll go into another bank. Recently, I had a client. Now, thankfully, it all worked out well for them, but they applied not only with a mortgage broker, but all five of the big banks applied independently. This is tough. This is what you do not want to do. And there's a reason for that. It's because they're going to check your credit. Now, normally, when somebody's just looking to get a mortgage, if they get one opinion or two opinions on mortgage, even if a hard credit check is done on them, two, not such a bad thing. There's a difference between a hard credit check and a soft credit check. If you get multiple hard credit checks, I'm talking in this particular case, like 6 hard credit checks, that person may damage their credit up to like 5 points per credit check. And that could be a really big deal, particularly again if you are a marginal borrower or if your particular credit rating will get you a better rate now and a worse rate later on if you go down too low. So let's talk about the soft credit check. Soft credit checks, like basically what you can do if you're on whatever Credit Karma or one of your own apps, and your RBC app on your, checking your credit card, or your Scotiabank app checking your credit card, that comes up and it shows you your credit score. Now, that credit score is often not exactly the same as if you actually get a hard credit check, but it's a general idea of where you're at, and you can check your own. It doesn't affect your score. But if you go and fill out an application which with each one of these banks, and they ping your credit, they check your credit, and then it starts showing up that you've had your credit checked in multiple different places within the last couple of weeks, your credit score could go very quickly from a 780 down to a 750, and you drop out of that top tier of 760 and above of rates, and basically that's kind of the top credit score, 760 and above. It doesn't get better for your lending if you're above, say, a 760 to a 770 doesn't matter, but a 770 to I don't know, a 740 could matter a whole lot. So what I'm trying to say is, make sure go have conversations with banks. I get it. Go have conversations with brokers, but really get a sense of kind of who you want to work with and who's going to get the job done these days. We're seeing another kind of trend right now where people maybe don't get the best rate because they're using gig work income or something like that. So they're having to go to, say, a different style of lender, like a Strive mortgage. We're seeing a lot of that right now, where people are going into these different style products and not necessarily getting the best rate. But then they want to go talk to their bank, and they want to go talk to the credit union. Everybody's doing all these hard credit checks, and it could be totally screwing up your credit. So don't do that. Don't do it. Talk to an independent broker, maybe talk to your bank, get an idea of what's going on. Reach out to your real estate agent, find out, okay, is this a good rate these days? Who should I be talking to? And don't get suckered into one of those online like bait and switch portals, like, the ratewhatever.coms. And whatever that top rate is, it'll say like a Canadian bank beside it, or a Canadian monoline lender, somebody like that. Those are going to be a bait and switch. You're probably not going to qualify for it. They're going to switch you off to something else. You're going to be disappointed. So talk to the independent broker. Talk to maybe your bank. And yeah, you know what? Right now, Scotiabank, they're probably the best if you go to them direct. RBC, I'll give you another example. RBC, generally speaking, this is not their policy at all. I'm just telling you from my experience through clients at RBC. RBC is the type of bank that will give you a rate now, and they will only give you a better rate if you go shop somewhere else and get it from somebody else. So consider that as well. Like, there are different ways to get different, better rates at different spots. But the best way is to not apply at every single institution, have them ding your credit, and possibly absolutely screw up your credit. And believe it or not, this may not actually affect you before your purchase, because if you get 5 or 6 credit ratings and you close in 3 weeks, it's probably not going to show up in time on your credit bureau. But it could take upwards of a year to get your credit back to the same level if you have it dinged multiple times. Your credit doesn't just come back overnight. It's a long history of getting built up. And if you appear to be seeking credit from multiple areas, the credit companies, the credit bureau doesn't understand necessarily if you were granted that credit or if you're being rejected by all of these different banks at the same time. And that's why you're seeking around like desperate for money. So that's why it affects your score negatively. So more than anything, I want to get this message out there. Deal with a broker that you trust. Understand that fixed rates are likely going up over the next little bit. And you may stand a better chance to get a better deal going directly to a bank, but you have to know what you're doing. So maybe reach out to your agent first, try and understand what's going on. And if you are talking to multiple banks, get a good idea of what's happening, deal with a mortgage specialist at the branch level, but do not, under any circumstances, do that many hard checks against your credit to try and find a better deal, because you may end up only screwing yourself and your credit in the long run.